Right. So and that's an easy way for people to accumulate silver.
Absolutely.
It's as easy, a mouse click away. And I would imagine that's been a big driver of accumulation of silver. Isn't it like a self-fulfilling prophecy? As more people buy silver, the more they get into their head that this is money, and then the more they think of it in those terms, and they start to move out of the paper assets that they have big questions about. They start moving into precious metals, and it's almost like a self-fulfilling prophecy. So even before policymakers say we need to go back to a precious metal standard, it's like the people are already moving in that direction ahead of the policymakers. Is that a fair characterization?
Why on earth would the government of the largest country in the world by population, China, actually have an official policy to support its general population purchasing gold, not one-time purchases, but monthly purchases? Why would they do that? And silver. Why would they have an official policy to support that? Because of their concerns over the history of paper currency.
So I would imagine you keep track of the paper currency market pretty closely. And talking about China, they've got huge reserves. And we know that they're kind of backing away from their purchase of U.S. dollars. They're kind of moving more into the euro. They're definitely aggressive buyers of gold. We know this. Rumor is that they want to move their gold tonnage up by something like 5,000 tons to get more on parity with the states. Is that true?
Well, clearly the central bank wants to continually rebalance its foreign reserves. And when they started this cycle 10, 20 years ago, they virtually had nothing. So there's a process that the Central Bank of China is undergoing through the rest of this commodity cycle, continually rebalancing their reserves and significant demand for gold and silver for that function alone.
All right, so what's been happening in Mexico? Because here's a country that is clearly been through a lot of interesting economic transitions. And it's right on the border of the U.S., and there's huge, really now, emerging conflict between Mexico and the U.S. And but at the same time, the peso is very strong. It's one of the strongest currencies in the world now. And you've got shops like yourself down there who are mining silver, and you've got Hugo Salinas Price, who's a very high-ranked political figure who's moving toward a silver standard. And is it going to be a situation? Can that cross the border? I mean, everyone's concerned about the workers crossing the border into the United States and what that might do to the economy. But if the silver standard crosses the border, it would have the opposite effect, wouldn't it? It would be much more helpful to the U.S. economy.
Well, I think so. And if you look at the recent history of Mexico, originally up until the late 90s, Mexico was the poor cousin in North America.
Right.
And the reason for the flood of Mexican immigrants into America was the economic boom times of the 80s and 90s, jobs, the ability to send money back home. The tide's turning on that too. Mexico joined NAFTA in 1992, and really in the last 18 years, you've seen a huge economic boom, principally in northern Mexico, the raising of the general populace's expectations, the creation of a middle class, the creation through the educational systems of our professional class, and that's done wonderful things in Mexico. So really what I think the next tide is, with regard to Mexico and America, is a repatriation of their ex-immigrants. I think you're going to see people coming back to Mexico because of the opportunities there. And our business is fueling that. If you look at the investment of Canadian miners alone, there's over 200 of us exploring and developing mines in Mexico. Our investments annually are measured in billions of dollars just in the mining business in Mexico. And that's principally for gold and silver.
Right, and the product that you're coming out with is becoming a key essential product for the global economy to recover. In other words, let me ask you the question about the global economy. The policies that are coming out of Washington and other spots to try to stimulate the economy, they seem to be pulling the same trick out of the same hat. More monetary adjustments, more bailouts, more fiscal tweaks. And none of it's working. The deflation, if you will, is still, in the housing market, is still sucking this economy into oblivion. And so is it possible for the policymakers to tweak their way out of this problem, or do we just let this whole thing collapse and start all over again? What kind of a philosophical question, if you will?
Again, we unfortunately have to look to history, and historically governments have inevitably only had two choices when they were faced with rising debts and deficits. Either default or debase your way out of it, inflate your way out of it. And of course, QE1 and QE2 are simple reflections of the Western governments in trying to inflate their way out of their current debt and deficit spirals. Historically, exactly the same thing has happened throughout the millennia. You talk about the Roman Empire, for instance. The denarius was the monetary unit of the Roman Empire BC, and I believe it was 8 grams of silver or 4 grams, I can't remember. It was principally a silver coin. Do you know what silver was remaining in the denarius by the time the Roman Empire crumbled, 200, 250 AD? It was less than half a gram of silver.
And what was the penalty for if they caught you? What was the penalty if they caught you diluting the silver? Didn't they cut your hands off or something?
Well, I don't know about that, but my point is that historically, governments debase currency. It's either that or default, and nobody likes default.
Speaking of debasing currency, it's funny that one of the ways that they are debasing the currency, two ways. One is interesting that they're making portions smaller. So if you go get a can of soda pop, it's a third less the size, but the same price. So you have this incredible shrinking shopping spree. Things are you bought the same thing, but it's less space. So I think people are like confused by this. They don't understand. They think they're getting bigger somehow in relation to their food. They don't understand it's inflation. So you're if I hear what you're saying there. Historically speaking, there's probably we're in it's baked into the cake something of a collapse.
Well, yes. Not always do you end up with the ultimate collapse. I don't think we have to have a complete financial meltdown to end this cycle, but clearly there has to be a final event with a kind of a threshold. Global decision of what to do about the current spiral.
What if the globalists come in and they say we want to float 100 trillion more debt? We want to create a new super global currency. Roll the dollar into it, roll the euro into it, and we're going to do this whole thing, but based on paper, 100 trillion in paper.
Sure.
Okay.
Have you heard of the Weimar Republic?
Yeah, okay, it sounds crazy, right? But you've got guys like George Soros, he wants to do Bretton Woods too. They want Davos, they said 100 trillion more debt. They've got a huge support to it. And who is standing up for us on the hard money side? Is it who's the biggest silver vigilante in the world? Is it Eric Sprott? Is he the main man?
Certainly, Eric is the biggest champion of silver in North America at this time.
He's a buyer, right?
He's a huge buyer.
How many tons does he own?
Well, to be honest, I don't have that number, but let me tell you a little story. When Eric got on this bandwagon 2 years ago, the reason why he was moving from gold, which was the investment of the decade in the 2000s, to he's calling silver the investment of the decade in the 2010s, okay? His rationale is very simple. When you look at the people, and there's only 2 organizations who do analysis of bullion flows, Goldfields Mineral Services is the primary source of bullion flows worldwide. But when it comes to investment demand, there is no way to directly calculate what investors buy. So they always do a backwards calculation. They calculate everything else, and the remainder is implied investment demand. And Eric was a bit frustrated by this. So he said, well, why don't we find out what real demand is? And his homework a couple of years ago, just looking at the ETFs, the bullion funds, and the portfolio managers that he knew were buying silver, and calling these people up and finding out how much silver they had taken out of the market physically in 3 years, and then going back to the GFMS implied investment demand, guess what he found? That the implied demand was lower than the physical metal taken out of the market by a handful of buyers. What about the small guys? What about the coins? What about the bullion? What about the smaller portfolio managers who don't report? What about all that physical demand for investment?
Well, let me ask you a question. What if 1 million people around the world today each bought an ounce of silver? What would that do to the story?
Oh, my goodness. billions of ounces of silver would have an impossible impact on the market.
But no, 1 million ounces. 1 million ounces. Let's say around the world today, everyone went to their coin shop, and today 1 million ounces from the little guys, as you were saying, totally underreported, not in the GFMS survey,
Yep.
and as not calculated in the price movement. 1 million ounces. Let's say 1 million people, they took an ounce of silver off the market in one day. Okay, what trickle effect does that have, if any, on any day? Does it appear as a blip anywhere? You're a major, silver producer, a pure silver play. You've got your antenna on 24/7 in this market. Would that register as a blip?
Oh, no, it'd be more than a blip. I mean, you're talking 1 million ounces in one day is 365 million ounces in a year, which is 36% of the entire market. If we assume there's absolutely no change in supply, that demands for silver to clear, it has to demand a 36% jump in the silver price for that market to clear. Because it's such instant demand, actually, silver, the price of the market would actually outshoot the 36%. I mean, it would have a major impact on the market.
A major price movement?
Absolutely.
In a magnitude of 30%?
Oh, absolutely. I mean, 1 million ounces in a day?
Right, and it's well within the wherewithal around the world for folks to do that. I mean, that's...
Absolutely. The
Right.
reason why you're seeing so much demand pressure on silver at this time, and presumably for the rest of the cycle, is that this is real demand. Even though it's investors, it's real demand. People buying silver.
Well, next time you're in town, we're going to have to talk about the banks who are trying to play the game of playing short. But
A whole other story.
it's a whole other story, an interesting story. But that's all the time for we have today. But Brad Cook, CEO of Endeavor Silver, thanks so much for being on the edge.
Thank you, Max.
All right, super. And that's going to do it for this edition of On the Edge with me, Max Keiser, and my guest, Brad Cook, CEO of Endeavor Silver. If you want to send me an email, please do so at ontheedge@presstv.com. Till next time, this is Max Keiser saying bye, y'all.